So what a down payment is, it's a percentage of the purchase price, right, that the buyer is bringing to the table at closing, which goes directly towards the loan balance. For example, if you're buying a house, let's say you're buying a house for $600,000, right? Get yourself a nice little piece of property, living out the American dream. And you're going to do that with 5% down. The down payment is going to be $30,000. 5% of that $600,000. Okay, so you're bringing the $30,000 to closing. So what that's going to do at closing, instantly your balance goes from $600,000, takes your balance down to $570,000. That down payment, that $30,000, 5%, whatever you want to call it, goes directly towards that loan balance, right? Initially, and it brings it down by that amount. Purchase price minus the down payment.
Where do closing costs come in? So down payment doesn't include closing costs?
No. Down payment is just a payment against the purchase price. Why don't you explain these fine folks what the purchase price is, or what the closing costs are, if you'd be so kind.
What closing costs are?
Uh-huh.
Okay. All right, I'll take it. So you've taken care of the down payment piece.
Down payment.
Closing costs are going to be any expenses involved with the actual processing and doing of the mortgage loan. These are going to include things like prepaid items, so any taxes or homeowners insurance that you're going to prepay, appraisal fee, third-party stuff like title work, transfer taxes. The government's got to get theirs, so they tax the transaction. So that's a transfer tax. And then you got lender fees, things like credit report. We're going to pull credit, and then we have per diem interest. Depending on what day you close in the month, you're going to have to pay interest from that day to the end of the month. And then, if you're going to do a buy down of the interest rate, maybe you're paying a point to buy the interest rate down from 6.5 to 6 or whatever. Mm-hmm. That would be a closing cost as well. So you have your down payment, you have your closing costs.
Okay. All right. So let me ask you this then. Okay, Del Santos, you're throwing a lot of big numbers at me. Cut the bull. Just give it to me straight. What the hell's the number I'm bringing to the table at closing? What am I going to have to bring to settle this damn thing?
As simply put as I can put it, your cash to close, the amount on the check you're writing at closing is the down payment plus the closing costs. Assuming there's no seller concessions and assuming the buyer is responsible and paying for all of their closing costs, cash to close is in this scenario, $30,000 plus whatever the closing costs add up to equals cash to close.
Yeah. And that was a fantastic overview. Well done. I think we could both agree that we could probably spend an entire hour-long segment, right, talking about closing costs and things that might affect those closing costs, both from the lending side, from the seller side. But I think that's a pretty good 30,000-foot view.
And a lot of people ask, especially first-time home buyers, they ask, like, do I pay my down payment? Like, do I write a check for down payment and write a check for closing costs? Or, like, how does that work? And it's all very simple once you understand the concept. And when you come to closing, you're going to write that check, and then the title company's job is to dish all that money out, disperse it. So disperse the portion that goes toward the loan to the against the loan, and then they cut checks out of your cash to close money. The title company cuts and disperses checks to the title company, to the credit reporting company, to the taxing authority, to Geico or whoever you use. So you worry about one bottom line, and then title company will dish it out.
Yeah. Well said. Very well said. That's good stuff.